If you're preparing a funding proposal, the impact the funding will have on the trading performance of the business is entered on the Funding Forecast tab. The forecast is initially populated based on the assumptions entered on the Baseline Forecast tab. To adjust this forecast, you can either enter a percentage increase or decrease to apply to your original forecast, or enter a revised sales forecast by month. In this example, we have assumed the investment will help us generate an additional 5% sales in each of the years within the forecast. Your revised cost of sale assumptions should be entered into the section highlighted, and any amendment to overhead assumptions should be reflected against the appropriate line. The revised forecast profit can then be compared to the original forecast profit. In each of the 5 years, the Funding Three-Way Forecast tab is then used to enter any assumptions relating to the funding. This will normally only impact the interest, capital expenditure, and debt sections. However, the funding could impact other elements of the balance sheet, so it would be worthwhile checking your assumptions on these lines. In this example, we are assuming £200,000 capital expenditure is required to drive the required increase in business performance. We will require a £200,000 loan, the repayment of which will begin immediately and spread over 5 years. And the average interest percentage for all debt within the business is 5%. Once you are happy with all the assumptions modelled, click the Generate Funding Proposal button to produce your funding proposal document. You will be informed once the funding proposal has been generated.